Welcome to this edition of NFP Insights. In today's short video, we've got Rich Hull from our private clients team with us to talk about key person insurance.
Thank you. Thanks for having me.
How's it going, Rich?
Really good, thanks. Yeah, not bad at all.
Busy?
Busy start to the year as always, but got some interesting cases that we're working on, so it's all
Fantastic.
All good stuff.
Nice. So, Rich, before we start, can you just give us a bit of a 30-second intro to who you are and what you do within the business?
Absolutely, yeah. So as you said, I work in the private client team of NFP, and I guess you might think of me as being a financial advisor, typical sort of IFA. Predominantly, my job is to manage relationships for private clients within the firm. We deliver a lot of investment advice, pension planning, tax advice, that kind of thing. I've got my portfolio of clients who I look after. Yeah. But more often, or more and more now, we are engaging with the individuals of the businesses that we work for at sort of corporate level as well. So I guess hence why we're here talking about key person insurance. It's looking at the ability to advise people on individual solutions, not just group solutions.
Fantastic.
So there's quite a bit of crossover in terms of private client work and corporate work for the key individuals within businesses as well.
Brilliant.
It keeps me busy.
Keeps you busy, yeah, I can imagine.
Yeah.
So thanks for that. So, right, going straight in there,
Yep.
key person insurance.
Yep.
What is it? In a nutshell, bit of a 30-second kind of elevator pitch.
Indeed.
Yeah, what is it?
Okay, I'll do my best. So I think you kind of hit the nail on the head a little bit at the start, which is kind of about businesses insuring their most valuable assets. So typically we talk to businesses about their most valuable assets being the people, and it's the people that drive success and drive businesses' success. Key person insurance is, it is backed by an insurance product, but it's a way of businesses identifying who the key drivers of success are within their businesses, and making sure that within the realms of what we can control, that there are some insurance solutions that could kick in and provide financial stability, financial resource, should one of those key individuals be unable to perform their role within the business. Right. There's a kind of a knock-on effect. So I think one of the phrases I use is that it's helping businesses insure against the human risk in their business. Yeah. So a lot of our clients and a lot of businesses will be insuring their assets, insuring their buildings. They'll be taking out liability insurances, but this is specifically allowing a business to look and drill down on the key individuals, the people within their businesses who are making their businesses successful. Yeah. And thinking about those kind of scenarios where that individual cannot actually perform that role. Does that make sense?
Yeah, that makes 100% sense. When you say they can't perform their role, we're talking about, unfortunately, death and other critical illnesses.
Yeah, correct.
What kind of serious illnesses? Just a few examples.
Yeah, so death's pretty black and white, and it's a horrible thing to think about, and but ultimately we all know about life insurance. It's a core benefit to a lot of people, both in our personal lives and at work. So the death piece, if you like, is pretty black and white. But when it comes to an illness that's stopping someone carrying out their duty, that could be that someone is diagnosed with a critical illness, cancer, heart attack, stroke. Yeah. And one would hope temporarily it might keep them, if they are unlucky enough to be diagnosed and to suffer that kind of illness, temporarily it would keep them away from work during a period of recovery. So there are policies, critical illness insurance policies, which pay out a lump sum typically in the event of someone being diagnosed with that kind of critical illness. I don't want to get too jargony here because the industry is complicated and the products are complicated. So there's an insurance solution that can pay out on successful or unsuccessful diagnosis, whichever way you want to look at it. The other type of insurance product that we use for key person insurance solutions is, in our industry, it's referred to as income protection. But what that does is it pays the business a regular amount of money in the event of a key individual not being able to attend work. But the trigger of the payout is not because they've been diagnosed with a specific illness. The trigger for the payout is just that they're just not well enough to come to work after a period of, say, 30 or 60 days. Yeah. And that's those types of policies, I think, are really, really important, probably more important than typical critical illness policies that only pay out over a sort of maybe 15 or so specific illnesses or diagnoses. But an income protection type policy, the key thing is that they're not well enough to come to work at the moment. And that might be through mental health. It could be through exhaustion. It could be that they've had an accident outside of work. And I think now, we're more aware of the pressures on key individuals, on executives within businesses. So if you've got a policy that could generate some well-needed capital inflows and revenue inflows to a business when someone is unwell, is too unwell to come to work, they really, we get a lot of traction with that at the moment, and a lot of people are really keen on looking at those.
And what kind of businesses is this geared up for? Is it the whole spectrum from your large corporates down to, say, your manufacturing client that I know we're surrounded by here on this kind of technology part?
It's a good question, actually. We've dealt with lots of really interesting businesses over the last 2 years, I guess, typically, where we've been sort of proactively talking about this. And I've written key personal insurance plans for, I'm just trying to think of a couple of examples, some pretty big financial business, asset management businesses in London, right, where they've got portfolio managers who are running big books of investment business for them. They've got a unique skill set, they've got experience, they've got relationships with their investors. And if that individual was not there to run that portfolio and to manage those relationships, then they're looking at some fairly chunky levels of cover, actually. So, multiple millions of insurance. But then, like you say, on the other end of the spectrum, if you like, we've got small partnership businesses where each party of a partnership, I should say, brings certain skills to the table in terms of making the business run successfully. So you might have a partnership arrangement, not even a limited company, where they are looking at insuring themselves because they can see the risks within the business if one of them wasn't there to carry out their roles and their duties. So yeah, I mean, it's a bit of a cliche, isn't it? It can be across the whole spectrum. So we will help and have discussions with businesses, small partnerships, small limited companies, 1 or 2 directors, right up to really, really big businesses where they're insuring key individuals, CEOs, CFOs, some senior executives as well.
Yeah. And how is it costed? How do they work out the cost? What are the kind of elements to put a cost and a quote together for some of our clients that might not have ever had one before?
Good question again. And I think a lot of our clients who might be watching this video, existing clients and potential new relationships as well, might be used to talking to us about benefits on a scheme basis. But and this is very different to that. So when we write this kind of business and we help people set these solutions up, it's done on an individual basis. So these are standalone individual policies. So there's no cross subsidy, there's no averaging out of risk across schemes. We haven't got this sort of the sort of balancing there. So we typically help people with the application process. We can give them indicative costs up front, and the indicative costs would be, what's the market offering this insurance for that individual based on the amount of insurance you're looking for, whether it's straight life insurance or whether it's a policy that covers those kind of illness scenarios as well. How old is the individual that you're looking at insuring? So obviously, typically, the insurance gets a lot more expensive when the individual is over 50 and is older. What are the existing health conditions or status of the individual? So are they a smoker? Is there any obvious sort of markers that they've got sort of poor health at that time? And then really it's about the amount of insurance that you're looking at taking out and for how long. So if you're insuring a 50-year-old who's a key individual, you might say, well, they're probably not going to work past 65, 67. You might look at an insurance policy for, say, a 15-year period or a 20-year period, knowing that you can cancel it. But yeah, really, age of the individual, length of the cover, and any sort of clear indicators that person might have a sort of higher cost of insurance because of their medical situation.
And are you helping our clients or prospects, should we say, identify who those key individuals are within the businesses, or do typically people come to you and say, there's a person that we need covering?
Yeah, I find it difficult sometimes with the latter. because actually if someone comes to us with a predetermined idea of a level of insurance or the people that they need to cover, they might not be looking at it through the same eyes that we would. So actually, it's far more meaningful for us to be able to get in early with a company and have really open dialogue with them about, you know, who are the people within your business. You think that the business is at risk in this way, but with a fresh pair of eyes, we might identify that there might be other risks they're not thinking of, or they might be, in some instances, looking at over-insuring an individual. And then when we drill down and look at things like, you know, the level of profitability that might be attributable to that individual, you know, we can really engage with people. So I think the earlier the better. And I enjoy that. You know, it makes my job far more interesting, far more rewarding to think that we're actually opening up people's eyes to sort of risks that they didn't appreciate.
It's just more of a consultative approach.
Yeah. If it's done right, it should be.
Yeah.
It should be. And I think our industry is sometimes guilty of, you know, just going ahead with a level of cover, you know, with a view that any level of cover is better than no cover. Yeah. But I think certainly we would prefer to drill down a little bit more and identify what the real risks are for the business.
Are there any costs involved in that initial kind of scoping consultative work for you to go in there and identify who these people are and look at, I suppose, everything from a kind of bird's eye perspective?
No, we listen, I mean, it might be an obvious thing to say, but we'd be very happy to just agree some initial discussions with clients. If people are watching have got existing relationships with us, they've got existing relationship managers, have a chat with them, see if we can set up an initial call, meeting, just to really see if we can add value. If it doesn't come to anything, it doesn't come to anything. But, you know, I think if someone is arranging that meeting, they're probably already aware that there might be some risk in the business. So no initial cost. It's
better to know than kind of something happen and then identify it, isn't it?
Yeah, and hopefully, you know, listen, this is a discussion around insurance. It's around contingency planning. It's about identifying risks, and ultimately, we're talking about mortality and some fairly unpleasant topics. But we try and make it as pain-free as possible. Yeah. And you know, and it's not exactly an exciting topic, you know. But hey, it's got to be addressed, really, hasn't it?
Yeah. Fantastic. Well, I think that's it, Rick.
Okay.
Yeah. Thanks for coming.
Thanks for the chat. Yeah. And hopefully that will, you know, even if it just sort of provokes some thought for some of our clients and get them thinking about this as a key area of within their businesses, really.
Yeah. Thanks for coming and speaking to us today about Key Person Insurance, Rich. And I hope you enjoyed the video, and I hope you found it useful. If you do have any questions about this, speak to your NFP consultant or visit our website at nfp.co.uk. Thank you very much.